Google just made a big play in the race for a slice of the global e-commerce pie, this time by dropping over $500 million in cash into Chinese online retailer JD.com. The two companies plan to explore retail solutions throughout Southeast Asia, the United States, and Europe, as Google seems to be preparing for a long-term defense strategy against Amazon, which is not so quietly encroaching on Google's digital ad space. The move also offers Google the ability to partner with a company that has its own fulfillment and logistics network, just like, you guessed it, Amazon. This comes just a week after Google entered into a deal with French retail giant Carrefour to sell groceries online in France. Here to tell us more, we've got Bloomberg's Mark Bergen, who covers all things Alphabet for us. And in New York, we have Isaac Stone Fish, Senior Fellow at the Asia Society. So, Mark, first of all, how does this fit into the broader e-commerce strategy at Google? Yeah,
Google's certainly taking a shift. Years before, they had their own shopping delivery service called Google Express. It's largely been a failure. Their new strategy has been to partner, and it's sort of the enemy of my enemy is my friend, and their enemy in this case is Amazon. And this also fits with their strategy around Asia and China in particular, which is to partner with a lot of Chinese companies that are looking to expand outside of China.
Well, it's interesting given that Amazon doesn't have a great China strategy.
Yeah, I think the markets they're focusing on right now are Southeast Asia. Indonesia is a big market that JD is looking at, and Google as well. They're looking at other countries in Southeast Asia, and clearly India is a big focus. Google has talked a lot about their efforts, and we've seen them kind of chip away at returning to mainland China, and they recently cut a partnership with Tencent and now with JD.
Isaac, what's your take on this? JD.com, the number 2 player when it comes to e-commerce in China, second to Alibaba.
So I think this move is very important, mostly on symbolic levels. The $550 million price is roughly less than 1% of the company's worth. And I think really what it is Google trying to say to Beijing, listen, we want to come back into China. We want to be doing business with Chinese companies. And they picked a relatively non-sensitive company to do it. E-commerce is much easier to get into. It's much less of an information business than, say, search engine, which is what caused Google all of its problems in China in the first place.
So, Mark, I was in China, in Beijing, when Google left the country. And, there's been no sign of a potential return. Could this be more about being back in the good graces of the Chinese government than it is about actually building a global e-commerce strategy?
I think that there are signs of return. We saw earlier this year, Google opened up the Beijing AI Center. They've really been pushing AI, their TensorFlow AI kit in China with Chinese developers. I think they've been trying to back in with their cloud service. Now with the e-commerce, this has been a much more, I would say, around their strategy in China, which is to go to these Chinese companies and these startups and larger companies like JD and say, we want to help you expand outside and effectively take on bigger rivals like Amazon.
Isaac, Google has never been willing to censor its search results, which was basically the requirement of operating the search engine in the country. Is that something that you think could change, or is this about getting in the country but not having a search engine there?
I hope not. In 2010, when Google decided to leave China, China's economy was roughly a third the size that it is today, and China just becomes more and more inevitable for global tech companies. And I really hope that Google, unlike, say, LinkedIn, which does censor its Chinese language site, keeps to its ethics and keeps with the don't be evil vibe.
Mark, talk to us about how this fits in with the digital assistant strategy. Of course, Amazon has Alexa, Google has Google Home, and it has seen some pretty early success.
Yeah, and I'd say Google's a very different company than it was in 2010 in some ways. They're certainly looking a lot with search towards voice and AI, and that's where they see a bigger challenge from Amazon. Right? Amazon Echoes have taken off, and that cuts to the core of Google's business. It's not an immediate threat to their business is still growing significantly, but they're looking ahead, and possibly you might see them return to in Asia and in China in particular with a voice service. And then the part of that network that they're looking at is we're going to use our partners like Walmart and Target here, and maybe like JD in parts of Asia, to actually have a voice commerce strategy so people can buy on using these voice assistants.
Different enough to censor its search results?
Yeah, TBD, I guess.
Isaac, talk to us a little bit about, if this is about taking on Amazon in the future, and we know that Amazon's ad business is encroaching on Google, encroaching on Facebook, Amazon, hasn't had great success in China and has really been boxed out by, the local heavyweights.
They certainly have. I think it's kind of interesting to watch American companies scramble to work in China, just as Chinese companies are scrambling to work in the United States. And I think Bloomberg audiences, some of them know what JD.com is, but your average American consumer has absolutely no idea about JD or even Alibaba. So I think we're probably going to see more of these partnerships in the future where major American and Chinese tech firms realize that in order to get into the other market, they need to partner with a local. That said, we saw Friday the announcement of those $50 billion of tariffs on Chinese goods. We saw retaliatory tariffs from Beijing, and it's certainly possible that worsening political tensions between the United States and China means that this is a rare piece of good news in U.S.-China tech trade.
That's interesting, Mark. There certainly is a political angle here as well.
Yeah, I think so. I mean, I think in there are markets like Indonesia, Philippines that probably don't have as much name recognition with JD.com as they do with Amazon and Alibaba, and so JD comes in and Google has this global brand recognition. So it benefits JD, and then it also benefits Google if and when they return to China.
Talk about the longer-term benefit of the ad business here and how Amazon is, slowly encroaching on Google's territory.
Yeah, what Amazon have is, is basically what the ad business calls a closed loop, right? They have everything from people go in and they perform their search queries on Amazon, and then they buy things on Amazon. They have their credit card information. They have Amazon knows everything about the shoppers. Google knows a fair amount, but they don't necessarily know when people complete a purchase. And so with these partnerships with JD and Walmart, what Google can have through their partners now is they can actually tie the ad dollars that these major brands spend with Google, they're the core of their business, to an actual purchase. And that's really effective when they're going up against the challenge. I mean, we should put these things in perspective here. Amazon is building out an ads business, but it's still very, very, very small compared to the share that Google has.
And what about the cloud? I mean, there's also a long-term benefit of cloud sales.
Totally, and I think that's where Google's seeing a lot of their future growth right now. Outside of ads, it's in cloud, it's in hardware. The cloud is something Diane Greene has talked pretty openly about how she sees China as a really exciting opportunity. And I think if we do see Google go back into China, it's likely in some sort of offering around cloud and AI.
But China, of course, Isaac, is not without its cloud competitors. Alibaba has a huge cloud business. Amazon has an aspiring cloud business in China. And also the cloud, I presume, comes with its own set of security concerns that the Chinese government might raise its eyebrows at. Do you think Google can build a big cloud business in China?
I think it could if it decides to. I think the worry is what it would have to give up in terms of data security and in terms of brand equity in the United States to do so. I think a lot of worries about American tech companies partnering with Chinese tech companies or being too involved with China is that they basically always have to store their servers in China. There's not that same reliability of data security as there would be in the United States. So Google could certainly be a lot larger in China if it so chose. But the question is, what would it have to give up to do so?